Good afternoon, everyone. On today's edition of The Final Bar, we will be fishing for alpha. I'll share with you one of the screens that I use to try to identify stocks that are diverging from the broader market environment. In a shifting stock segment, we're going to talk about some of the stocks that are moving with the markets giving back about half of their gains going into the close. We'll look at stocks that are on the move today. We'll also have a level up segment talking about the chart pack system. Ladies and gentlemen, this is The Final Bar. Hello, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. We appreciate you joining us every weekday here on Stock Charts TV to recap the action of the day from a technical perspective and, most importantly, connect it to the long-term trends. One of the people I follow on Twitter, actually, when I posted a chart about the market, said the bears keep getting smoked. And isn't that how it feels? The market continues to push higher. We have new all-time highs today, although we gave about half of it back going in the last 30 minutes of trading. So we're going to look at all those charts, think about how this short-term movement compares to the long-term, particularly in some of the leadership places like technology. Also looking at things like home builders that are just starting to break out. We're going to break down all those themes and more. Before we get to the market recap, though, I did want to remind everyone, we've got some really fantastic shows coming up in the next couple weeks. We took time off for the holidays. We lined some things up going forward in January. On January 15th, we have Katie Stockton, who is from Fairlead Strategies, longtime sell-side technical analyst, very capable. On January 16th, we have Doug Bush, good friend and a very avid stock charts user. The week after that, we have Greg Harmon, one of my fellow Midwesterners from the Cleveland area, who does a really good job with the charts. And then on January 29th, we're going to unleash one of our first special programs called 50 Years on Wall Street. This is featuring the tour that I had with Ralph Acampora at his barn outside of Minneapolis. Talked a lot about his career on Wall Street and things he learned from that. You're not going to want to miss that on January 29th. So let's talk about the market recap. As I mentioned in the introduction, it's funny. I think it's a cruel joke that the last 30 minutes tends to completely change course because we start getting prepared for the final bar and then immediately things start to, there's an inflection point, I think, when I open my laptop to get ready. Because the last 30 minutes, we had a real distribution going into the close. Now, there's some news that started to come out, some unconfirmed reports about additional explosions in Baghdad. We'll have to see if that's actually the case or if just jitters based on rumors. Nothing confirmed that I've seen, but that's sort of apparently what the pullback is driven by. But on the charts, let's think about what it relates to. Overall, the S&P up about 0.5%. It was up almost 1% at about around 330 before we had the distribution into the close. Mid caps, small caps, not up as much. So you continue to have leadership from the largest, the mega cap names. One of the charts I just sent around on Twitter earlier today was looking at just year to date, the S&P large caps versus mid cap, small cap, micro cap. Out of those four, which one out of any of them is up so far year to date? The answer is the S&P 500. It's the only out of the four that's actually up. The rest of them are actually down year to date, again, up until today. So let's look at the chart of the S&P 500. And again, it felt like we were going to close at new all-time highs. We drifted above almost at 3270 earlier in the afternoon, but then came back, settled in just above 3250. So it's not a new closing high in the S&P 500, but certainly, overall in terms of the context of the trend, continuing this trudge upwards, continuing to ignore this sort of non-confirmation of this bearish divergence we've had on the RSI with the S&P, but also in a lot of other charts as well with higher prices, but not confirming that with the RSI. But overall, the price doesn't seem to matter. We're going to look at a lot of charts that are sort of, some bullish, some bearish. But the thing I would remind everyone, and please keep this in mind, when I sent some charts around earlier talking about, some of the bearish signals, we're going to talk about breadth in a little bit from now. But again, all of that doesn't matter. As long as the primary trend remains up, overall, you want to be owning stocks. You want to be in the trend, right? You want to be following the trend, especially if you're a longer-term investor. So today is nothing but it's signaling a continuation of that trend until you get some sort of divergence. So really at this point, I think 32.10, which is the low from the last week in December, as long as we remain above that in the short term, overall the primary trend remains positive. So don't worry about that until we get signals that tell us otherwise. This is the last week, and you saw yesterday's trading was really digesting the gains from Monday's session. Today we really rallied and pushed strongly positive out of the gates, but then you can see the last 30 minutes, really moving lower. And again, usually the last 30 minutes gives you an indication of some of the larger positions, larger institutions, because that's when they're going to fill this. This ended up, appears to be a little more rumor driven. So again, we'll have to see what sort of news flow we get overnight before tomorrow. But again, overall, giving up about half the gains from earlier today. I did want to point out on the member dashboard, looking at the sector returns. So technology, still the strongest chart. We're going to look at that chart here in a second. Up over 1%. So the S&P up about 0.5%. Doubling that is the daily return on the technology sector, followed by communication services, followed by healthcare, followed by financial. So that is really the traditional leadership you'd probably expect to be at the top if we're in a pretty healthy bullish phase. At the bottom, we have energy. You have utilities. Consumer discretionary, notably at the bottom or toward the bottom of the list here. That's a little different than what you might expect. You'd probably expect that to be more at the top, but again, pretty diverse sector with a lot of different themes in there. We're going to come back to some of the the stock-specific themes in our shifting stocks segment, looking at the Scooter rankings and what sort of evolved. But I did want to point out a couple things here, continuing on the member dashboard. Number one, looking at global markets. So you had Russia up over 2% today, India up over 1%, followed by Germany, some developed Europe here. But it's noteworthy to note, and this is where I think global ETFs are really fascinating to follow. There are a lot of regions that are going to do much better and much worse than the S&P 500. So don't limit your view to that. Make sure you're looking at ways for some of these charts to come up. And it's interesting, the chart of Russia. Look at how attractive this has continued to be. Just this beautiful stepwise motion in the RSX is one of the main, most liquid Russia ETFs. A continued pattern of higher highs, higher lows, the beginning of December, finding support at the 50-day, and now, confirmed closing to new highs, and on a relative basis, breaking to new relative highs as well. So while the S&P 500 has not been able to confirm a new closing high today, you have other markets that are actually doing very well. India was number 2, but still sort of choppy, sort of range bound, not as in as good of a place as Russia. In terms of industry, some really interesting themes that came out. Paper, the number 1 group out of all the Dow industry groups. It's a pretty large group of industries, but you can see paper stocks up very, very good. That's coming off a very depressed level, so not as exciting necessarily. Automobiles actually really interestingly at the top of the list. And again, I'm really interested in charts that just look long and strong, up and to the right, continued trends, reapproaching the extreme overbought region, which tends to suggest further upside after a bit of a pullback. Then you have some financial sectors like consumer finance, specialty finance, and we talked about the XLF yesterday. That was one of the 3 and 3 charts, but look at how some of the groups within financials actually look fantastic. So specialty finance might be a really interesting group to look at in terms of strength. And then finally, tobacco. And when tobacco stocks being at the top of the list here, again on an update, is kind of an interesting one. At the bottom, again, we don't have time to go into too much of this, but I would point out that material stocks across the board pretty weak, followed by some of the energy sectors. So those bottom couple sectors really reflecting on the industry groups as well. So a lot of interesting themes in there, and again, really worth your time digging through some of those charts if you're not super familiar, if you don't look at them too often. Our next segment is called Fishing for Alpha, and this is where we love to look at the scanning engine on stockcharts.com. It's one of the most powerful features because it allows you to scroll or really filter through the entire equity universe and focus on some particular universe or a particular theme, a particular idea. And I want to just highlight one of the ones that I've tended to use. If you go onto your member dashboard, click on scans, you're going to get to your scanning engine. The save screens that I have are on my list here. Yours is going to look very different. And to create a new scan, just click on new scan there. There are a number of these that I run pretty regularly. A lot of them are part of my sort of weekly routine where I'm trying to pay attention to what's happening. But I wanted to focus the ones at the very bottom of my list, stocks less than a falling 200-day moving average and stocks above a rising 200-day moving average. I want to show you what that screen is, how I created it, and let's look at some of the results and think about why they could be kind of helpful. So here we're going to look at stocks trading above a rising 200-day moving average. And again, a little outside the scope of the final bar with our limited time to really get into the depths of the scanning engine. So if you're not familiar with this, if you're not super nimble with how to run the scanning engine, I would encourage you to look for Chip Anderson's videos on YouTube. He has a show called Deep Dive with Chip Anderson, and one of them particularly goes through the scanning engine in great detail, and he walks through how to create this, how to filter through the universe. So please check that out if you're not as familiar with it. But what I'm basically looking for is two things, essentially stocks, and at this point I think I filtered it for the S&P 500 just to make sure they're names that we're all familiar with. And the main things that I'm looking for are this. Number one, I want to have a rising 200-day moving average. So here I'm basically looking at today's 200-day is greater than yesterday's is greater than 2 days ago. That's a very simple comparison just to make sure the last couple days were higher. So overall, this is going to give me stocks with a rising 200-day moving average. And then the second thing I'm looking for is making sure that the price is above the 200-day, and that's this line right here, number 6. So I want to make sure that the close is above the 200-day simple moving average. And again, all these other things are just noise, extra stuff that you don't necessarily need to know. When I run the scan, here's what the results look like. And again, you all probably have your own ways of doing it. When I do it, I like to filter it by sector because for me, I tend to think of sectors first and then look for the themes within there. So that's what I tend to do. You're welcome to sort it however you like. Some people like to look at large cap names before small cap or whatever is of interest to you. Or you can just look at the chart list. But what's interesting here is 370 stocks out of the S&P 500 satisfy that screen right now. And if your question is this a broad advance or a very narrow advance, I would say based on this specific metric, it is a very broad advance with almost 4 stocks in 5 in the S&P 500 in an uptrend by this definition, above a rising 200-day moving average. And that makes sense because so many of them are obviously in a bullish phase, but actually seeing the results and seeing how many of them satisfy that filter is kind of interesting. I'm just going to store these results in a new chart list. And again, forgive me for going very quickly through this part of the game, but I want to get to the charts so we can talk about them together. So this is what these charts will tend to look like. So part of the screen is this red line, the 200-day moving average. I want to make sure it's sloping higher. And then the second one is I want to make sure that the price is above the 200-day moving average. Now, not all of the charts are going to look exactly like this. Some of them are going to be much more extended. So something like Activision Blizzard is really testing long-term highs, while something like Akamai Technology not quite above the high from the fall. So they're going to look very different. I like to think of scans as the starting point to kind of filter the universe down to a group of charts that you can start to look through visually. So 370 charts is a little much to be looking through. I might want to filter that a little more and look for some other ideas. But I just wanted to get a sense of where, in which sectors, what these stocks are looking like and how many of them are in that sort of overall bullish phase. And the average stock kind of looks like Charter Communication in a nice uptrend, the price above the 50 and 200-day, and that's what's going to come out of this screen. So that's interesting. I'm not surprised that there are a great number of names that fit that. So let's look at the other one. This is stocks below a falling 200-day moving average. So sort of the opposite. I want to make sure that the 200-day is sloping downwards. And now I want to make sure that the price is below a downward sloping or a falling 200-day moving average. Now I can see that 63 out of the stocks in my universe, and again, I filtered it, I think to the S&P 500 or our universe very similar to that. And 63 stocks actually fit that criteria. So let's look at that group of names. I sorted it by sector. Now I'm going to look at the list. And now I'm going to just look at the charts. And again, if you're really doing this for real, I'd encourage you to add to your filters to sort them in different ways to sort of break the universe down so you can get through the charts in particular. But now you can see what these stocks look like. A down market, a downward sloping 200-day, and then the price below that 200-day moving average. So why do I want to screen on this, and what am I actually trying to do? What's the point of looking at this specific list? Well, we know that the S&P 500 is in a primary uptrend. We know that because it's above 2 upward sloping moving averages. The trend has been positive, higher highs and higher lows, continuing to push to new highs. So I want to look at stocks that are disagreeing with that. What are the stocks that don't fit into that mold? And this is the bucket that's going to allow me to do that. So I like to look at the screen that's the opposite of what the broad market is doing. The reason why we're looking at the slope of the 200-day, again, this is an average of the last 200 closing prices. So if the moving average is sloping downwards, that means that primary trend is sloping downwards. And even though most recently you might have a bit of a disagreement because this has rallied a little bit in the last 4 to 5 weeks, the long-term trend remains negative, again, by the measure of the 200-day moving average. I'm also looking at where the price is relative to the 50-day, right? So is it able to reclaim the 50-day moving average, or does it remain below downward sloping moving averages? And knowing that a chart like AAP looks so much different than the rest of the market, I think can be really helpful. So how do I actually use this? Well, number one, if you're trying to see what has not participated in the uptrend, because if there's a catch-up trade, if these things start to work, what are the ones that have been relatively weak so that you can start to get into some of those that might be undervalued, right? That would be the bucket to look at. The other thing might be looking for short candidates, looking for positions to potentially underweight, looking for stocks that are doing poorly because the average chart looks pretty good right now. So you see something like AAP that's actually testing support. I would argue probably a break below 150, 151, getting below the low from December would really confirm this as more of a short-term sort of topping pattern, right? A head and shoulders top of sorts, a high surrounded by two lower highs. But until you break down through that interim support level, not quite there. You also have something like Dollar Tree that's much more depressed. You had a gap down there in November. It's bounced off of long-term support from the low in August, but now again coming down to those levels. So you might find names like that that are actually, arguably starting to pull down a little bit. In terms of stocks that are appreciating, what I like to look for here is where they fit this mold of stocks in a primary downtrend, but where you don't establish a lower low. Darden DRI actually has pushed to a lower low, pushed below the October low, but I would look for an opportunity where it establishes a higher low, which would indicate some sort of accumulation, people buying into the weakness, and see if I could, potentially get in on the next leg higher. So in terms of this particular screen, again, I like to, number one, look at the broad market environment. Overall, the average stock is doing pretty well. So I want to look at the opposite screen and see what fits that criteria. Start to look through those charts, which we just touched on here, and see if there are some interesting ideas in terms of potential underweights, but also some stocks that might be bottoming. It might be very early on. So if there's a catch-up trade, if they catch up to the broad market uptrend, I can get in at a cheaper valuation of sorts. That is our segment, Fishing for Alpha. We're going to take a brief commercial break. When we come back, we'll have a segment, Shifting Stocks, where we look at the stocks on the move this week. I'll see you in a minute. Welcome back to the show, The Final Bar. I want to thank you all so much for joining us every weekday. Please keep your questions and your feedback coming. The Final Bar at stockcharts.com is the way to get to us via email. We read every one of your questions. We'll make a point of addressing them in a future mailbag segment that we'll be doing later in the week. In our next segment, we're going to talk about shifting stocks, and this is the segment where we like to look at individual price charts and how they're evolving, right? And individual stocks, individual names, individual themes, and how they're starting to evolve. We're going to look at the Scooter rankings. The way that I usually like to think about movement between equities is looking at the Scooter rankings. This is again, the Stock Charts technical rating that is percentile ranking all the stocks in a large cap universe as well as some other universes from the 99th percentile all the way down to the first percentile. And if you know where a stock is, what that rating is, you'll get a sense of how it relates to all the other stocks that you could be buying or selling at any given point. I do want to start, though, real quick by looking at home builders, right? So if we look at the home building index, XHB, there are a number of ways to look at home builders. I'm looking at the XHB here. There are a couple ETFs that sort of track it. Home builders have been a really interesting set of charts. We're going to look at a couple of them potentially here. But the group is interesting because we had this peak on the weekly chart back at the beginning of 2018. We retested that in the fall, and now again sort of testing those highs recently. Looking at the daily chart, you can see that the chart of the XHB, again, representing a broader sort of home builder group, you see how it's pulled back to the 50 days, sort of faltered around there, but now maybe just starting to turn a little bit higher. And there's significant resistance around 46.50 for this particular chart. And seeing if we get that follow through, I think would be really, really interesting. And what that would do, that's not the ticker, DHI, sorry about that. DR Horton, right? So this is the type of chart that I would want to see if it improves. This looks a little bit like the XHB chart for sure, but a lot of the home builders have pulled back a little bit. They'd been in really solid uptrends above both of the moving averages, upward sloping moving averages. A lot of them have flattened out a little bit, pulled back, didn't necessarily get a lower low from November, but have sort of established support in the case of DHI around 52, and now potentially starting to turn up. And the question now in my mind is, do we get enough of a move upwards to break above that 56 level here, or do we find return to support around 52, 51, and sort of continue a new leg higher? With something like this, I think RSI can be really helpful in seeing if it finds resistance around the 60 level, which is where a lot of times things like that tend to find a short-term top. So I did want to start with home builders because it's one that we've been noticing a little bit today in my work. Now let's look at the stocks that are most up and most down in terms of their scooter ranking. So again, if you don't have these on your member dashboard, there's a little gear icon in the upper right where you can enable these. And what I do is I look at the large cap scooter ratings, which ones are up, the top up on the day and the top down. These are going to refresh during the day. So as things fluctuate, you might get some different tickers in here. But a couple familiar names have sort of bubbled up here that I think are worth taking a look at. Netflix, it's very interesting when a big benchmark name, a name that a lot of people follow, appears at the top of that, because it is not a minor thing to be at the top of that list of improved stocks out of the entire large cap universe. Netflix, which is a mega cap name, up at the top there. And look at this really compelling rounding bottoming story that we have here, right? So you have this sort of basing pattern from the gap down in July. We tested the 200 days, sold off into the low in September. Now came back, tested that same resistance level, what I might call the neckline here, this resistance. Now we have this sort of short-term rounding pattern, sort of a cup and handle bottom, which is where you have a rounding bottom and then a short-term pullback here to the 200-day, and now just closing to a new swing high above the most recent peak. That's a really compelling long-term pattern. This is a stock that's up 250 basis points when the market ended up closing up about 1/5 of that, up about 50 basis points. So a really interesting upturn in a communication services name, which is one that's obviously very widely followed. So that's an interesting one to pay attention to. Let's go back to the dashboard. We'll look at some of the other stocks here. Delta Airlines pops up on the upmost list, which I thought was really interesting. Airlines have not been the best group. They've been a little bit chart challenged, right? So while so many things are sort of up and to the right, you have something like Delta Airlines, which is more in a consolidation phase, more in a range-bound phase. Felt very negative here going into the October low, lower lows, lower highs. But then all of a sudden we see a stabilization, a higher low and a lower high, as we sort of have a coil pattern, sort of a symmetrical triangle pattern now, which has resolved to the upside. So now it's broken above, now tested some upward sloping moving averages here in the first week of the year, and then potentially turning higher. So with that type of pattern, what you tend to want to look for is when we break above this most recent swing high. So with Delta, I'd set an alert for a break above 60 to see if we get some sort of upside follow through, which could be really compelling. On the downside, you have a lot of energy names. You have Diamondback, you have Halliburton, you have National Oil Well. These are all stocks in the energy specs, PSX, Marathon Oil. Most of these are actually energy names. And you can see how that whole sector has started to weaken. And again, when you see a very sector-focused list on one of these two, it tells you there was a very sector-specific move that a lot of things got caught up on. So some really interesting movements in both lists. I'd encourage you to take a deeper look at some of those charts and see what signals you can pick out of them. But we need to move on to our next segment, which is called Level Up. So what we love to do is hit on a couple random things during the course of the show, randomly to hit on key parts of the product, key things that you should learn more about, that you should understand more about. And in particular, this came from a question that we had about the ChartPack system. Someone was asking what exactly they were and how you could incorporate them. So I'll very quickly just tell you, on your member dashboard, if you click on the chart list button, this is going to list your list. This is your chart list. These are your custom names of lists of charts that you've compiled, and they will be in alphabetical order. I'm going to come back to that because the question actually came about the naming syntax, how you actually name these, and I'll show you the trick that Arthur Hill showed me when I first started becoming, hopefully, a power user of StockCharts.com. I have a lot of these lists, so you can see at the very bottom, you're going to have this little button that says Manage chart packs. So some of our contributors actually have free chart packs. So Arthur Hill has some chart packs he's created. The Decision Point team has some chart packs that they've included, a Stock Charts Essentials list, and my own list is called the Morning Coffee Routine, which I just added a couple weeks ago. Any of these, you just click on install, and what it's going to do is put in your login a bunch of chart packs that the commentator has actually created. It takes a snapshot of those charts as of the moment you hit install, and it puts them into your login. So your chart list will actually expand by all the ones that they've put in. You'll notice with some of these with Arthur, I installed these a year or two ago, and so you can see they have the little blue button now that says reinstall. So what happens a lot of times, the contributors will update their chart packs. You will not see the updates because you have basically copied the charts into your own login. So if you go back to this page, you might see a reinstall button. What that's going to do is refresh with the latest charts that the commentator has made. So you might want to look at some of the ones you use a lot and see if there's some updated versions that you may want to pay attention to. Now the question, once you install them, it installs them using the naming syntax that the contributor made up. So what happens is, I would tell you that all of the contributors use this mechanism. They start with the initials of their name. So Arthur's are AH. Mine will all start with DK, and that's so that they're grouped together on this list. The trick that you want to use is to name your own chart list starting with a numerical value, because that's going to put them in the order that you specify. Otherwise, it'll be in alphabetical order, which is not a great way to organize them, to be honest. I would put them in number order. In numerical order, I can create buckets, I can create groups, I can manage them how I want. And the really important stuff, I put like an exclamation point or some symbol in it to be at the very top of the list. That way, the chart packs that you've installed will be down below all of the ones that you are paying attention to. And in my opinion, it's a much better way to organize it. So that is the trick, I think, with the chart pack system and how to name your chart lists so that you can keep them much better organized. Start all your names with a numerical value, and that's going to allow you to sort them any way you want, anytime you want. But folks, we need to move on, wrap the show with a 3 in 3. So at the end of every final bar, we love to look at 3 charts in 3 minutes. If these are not on your radar yet, they should be as of this moment. We're going to start. Chart number 1 for me is the technology sector. Yesterday, we had the XLF on here. And again, for me, I'm seeing tech close up big again today. The XLK was up 1%, but a lot of the stocks within that group were up even more. Again, and I'm often asked, what's the one chart? What's the one chart I should be following to get a read on the market environment? And, it could be something like this. This would be a legitimate one to look at. As long as the XLK continues to look like this and leadership that has been leadership continues to go to higher highs, as long as the relative strength continues to improve, overall, that theme of technology leadership and continued uptrend, continued strength is in place. And until we break below some sort of recent swing low, the primary trend remains positive, and you should still think about, having your foot on the gas in terms of overall positioning, overall outlook until something changes. The second chart for me on the 3 in 3, I love to show charts that don't agree with that broader market outlook. Again, overall, if you look at the average stock, looks pretty good, and the average trend remains positive. So I'm looking for lines in the sand or levels at which I might want to change positioning, signals, red flags that may start to emerge. And for me, one of those is looking at breadth. And if you start to see signs of extreme breadth, and I think one of the places we've seen that, and we've looked at this chart before, is the percent of S&P stocks above the 200-day moving average. It's above 80%. That's only happened a couple times in the last 5 years, 3 times to be particular. And each one of those 3 times, the market's pulled back. In some cases, a short-term pullback. In other cases, like the beginning of 2018, a much more significant pullback. But overall, this is what tends to happen before the market pulls back. And the reason is because it is such a strong breadth reading. So many stocks on one side of that pattern in a primary uptrend that it usually means we're sort of getting to the end of that bullish leg, or at least time for some sort of healthy pullback of sorts, a healthy correction to digest those gains. So that's chart number 2, and seeing if that pattern agrees with some of the historical readings that we've gotten there. The third chart out of my 3 in 3 today is the chart of gold. We're looking at the GLD here, but you could also look at $ gold, which is the gold future, the future index. And this is basically indicating the fact that the GLD has broken to new swing highs. This happened in the last couple of days. You broke above. You've had a confirmed close above the September highs. But if you look at what's happened the last couple of days, have been more of a distributive pattern where you have closes below the open. Today we have a bearish engulfing pattern. This is coming after an extreme overbought region. This suggests a bit of a pullback before a resumption of the uptrend, and that's what I would be looking for on the chart of gold. And ladies and gentlemen, that's our show, the final bar for today. I would encourage you to please keep sending your feedback, your questions to us via email, thefinalbar at stockcharts.com. Thanks for watching today. And we hope you join us every weekday at 4 p.m. on Stock Charts TV. For Stock Charts in Redmond, Washington, I'm Dave Keller. Have a great day.